is David Reyes of Reyes Financial Architecture. Today I want to talk about the stock market. It's been crazy. This is the most volatile stock market we've had since 2008. In fact, October of this year was the worst October for the NASDAQ technology stocks since 2008 October. So you got to pay attention. Kind of where we've been and where we're at today. Market's been up, bull market for 10 years. Since 2009, the bottom of March of 2009 to today, into November, longest bull market ever. It's the second most expensive bull market ever. Now, in and of itself, those are not necessarily their problems, but what the most pressing problems, two things. Number one, China's a big deal, but more importantly, the biggest tell of markets when you start worrying about recessions and bear markets like we had in 08 and 2000 is interest rates. When the Federal Reserve starts raising interest rates, you got to watch out. Now, rates have been rising for about 3 years. We'll talk about that, but let me go back in time. I call it deja vu all over again when I give talks. And from 2003 to 2007, rates were at 1%. The federal funds rate was at 1% in December of 2003 and went up to 5.25% in December of 2007. Okay, so basically that was a 3.5-year time frame where rates were rising. Now, the Federal Reserve raises interest rates when the economy is doing well. So let's go back to 2007 again. 2007, the unemployment rate was 5%, which historically is very low. Today, unemployment is around 3.7. 5% is excellent. You also had unemployment was at 5%. You also had inflation was low, around 2%. So we have a lot of similarities today, and the market lost 55% from 2007 to 2009, March of 2009. So where are we at today? Today, rates are started going up in July of 2016. Federal funds rates around the time we started raising rates was about 25 basis points or 0.25%. Today, with the December rate hike, it's estimated rates will be around 2.5% to 3%. Here's the similarities that are very, very important to understand. It took about 3 years for rates to rise from 2003 to 2007. It's been about 3 years since we started raising rates from 2016 going into 2019. We have unemployment, which is 3.7%. It was 5% in 07. You have tame inflation. Market fell in 2008, 2009, 55%. The question is, where do we go from here? The scary part is people don't realize that when markets get overvalued like this, especially like technology or financials during the 2008 financial crisis, not only do you have bigger opportunities or problems with losses in the markets, but if you over own a sector like technology, if you've noticed, Apple's down over 20%. Nvidia lost 50% in a couple of weeks, in like a week. Nvidia, I think, is the 7th largest stock in the S&P. You've seen Amazon, Google just get demolished. So you got to be careful. A lot of you that I see own these big high-flying names, and they're starting to panic. And you should worry about it. So right now, as I speak, the S&P 500, the Dow was down 1,500 points, 1,400 points in 2 days. That's a problem. When you have this kind of volatility, you got to be careful. And so with the market the way it is today, I say the market has changed structurally. The kind of moves in the market have not been this bad since 08. And so the point is, what do you do about this? I'd recommend at a minimum, you evaluate the portfolio you have, make sure that you're not taking on more risk than you think. Unfortunately, you're taking more risk than you think. If you're your own advisor or you have an advisor, I would reevaluate your portfolio. One of the things that we do for clients, prospective clients, we'll do a complimentary second opinion and look at the fees you're paying, specifically the risk you're taking. So today is not a time to be brave. And I would say markets fall from tops, not bottoms. So when everything's rosy and great, that's when you start looking at how do I reevaluate, rebalance my portfolio. So those are the kind of things I can help you with. If you want to visit us at reyesplan.com, that's REYES plan.com. Or also you can go to our YouTube channel, Reyes Financial Architecture. See you next time. Thanks for listening.